It's Sunday, June 16th, and I got a super interesting topic today. So glad someone asked in the comments how I pick my stocks, and I think that's really interesting. So, we'll talk about that. First, though, let me update you on what happened on the account. A lot has happened. By the way, this is the video log that takes 30K to a mil. A lot happened. I made a really large move. Okay, it's gonna be a roller coaster. Yeah, let's go. So, if you can see over here in the options, I have some newcomers. This Apple options right here, and you're thinking, all right, not too bad, two sells, one call sell, two put sells, but that's actually a lot of money. So I put up $40,000 of collateral for the two put sells, and then 100 shares of Apple for the call sell, and they both expire January 17th. So I'm hoping to erase $5,000 right here. It says it $5,000 worth of collateral on the cash side, and hopefully plus the 100 shares I put up. So I'm hoping to erase that. Not the stocks, but get my collateral back and not have to lose any money in the process. So extremely big moves here. It's all gonna amount to about 6-7 thousand after, because I have to pay interest because I borrowed the money. I still have about 30K I can borrow, so if things go really south, I still have my SH, my $1,500 of SH that I can sell. If the market turns against me, I still have PCY, which is emerging market bonds, which is $5,000 that I could use to buy either EXK or Apple. And then I have the GSY, which is short-term treasuries, another $2,000. So I have some dollars to play with. If the market goes against me and it turns down, I got 7 plus 30, $37,000 that I can still go in debt and or use from the current treasury / bond funds. So anyway, you can see the notifications over here going crazy because I've made quite the amount of moves. All right. So a lot of little tiny purchases. I bought 10 stocks of 10 shares of Apple because I didn't want to be completely left without any Apple if come January 17th that price ends up above $200 and my call sells my 100 shares and my put options expire. Now, yes, I get to erase that liability, but I don't have any Apple shares. So if it goes to like 300, 500 by some miracle, I don't have anything. So I wanted to have some skin in the game. So I have 25 shares now of Apple that I just have. I don't have them sold. I don't have a call sold against them or anything. All right, so there's the action, some dividends, some buying and selling. I tried to dip my toes into Hanes brand, make like $110, excuse me. Here you can see I bought them at 656 and I sold at 669. So $13 profit right there, huge moves. I sold some calls against Wheaton Precious Metals at $24, expiring July 12th. We'll see if that happens. I've also sold calls against my uranium stock, Energy Fuels, for $30 total, 3 contracts. So we'll see if that triggers or not. Either way, I make some money. So, all right, so that's a lot going on here. I also before this option play here with Apple, I had sold Apple call for $60 and I bought it back for $30 right over here. No. For $31 right over here. So that's another $30 profit right there. Quick update on the account. I'm pretty pleased because on the day I beat the S&P on Friday by about 1%. So I'm really happy about that. If you look over here for the week, I beat the S&P with about 1%. It's about flat. So I'm beating the market on the week, beating the market on the month, beating the market 3 months, and beating the market a year. So I'm really happy about all that. So I'm beating the market in all aspects right now. Look, for the week, I'm up 1%, and the S&P is up. I think it's even. It's exactly even for the week, right? So a little more than 1%. And for month and 3 months, the same thing. I'm beating about a little bit. 2.51 and 3 for the 3 months. So 3.42 and 3.87. So for the 3 month, I'm beating by just a little bit, but still beating the market. So really happy about that. All right, now that was a little bit exhausting on its own. So let's talk about how I choose the stocks that I'm investing in and so forth. So a lot of these are actually not stocks. A lot of them are funds. We have some real estate. We have Russia. And it's just the ETF, right? Exchange traded funds. Wheat and precious metals. Well, if you look at wheat and precious metals, look at this recommendation. Oh, it used to be 100% buy, I think, but now 20% say hold. So the analysts love it. But I mean, I've known about this company and I folded. So the way, all right, look, the way I choose stocks is first and foremost. Actually, I have some notes. Is I gotta be interested in it. I gotta be interested in either in the stock or the sector, for some reason, right? Right. Something has to spark my interest. So whether it's the fact that I like metals, or it's the fact that I use Apple products, right? And I think they're well made, or whatever that sparks your interest about a company can be a reason for you to look into it, right? Just because I like the products doesn't mean that I'm gonna buy it outright. I like gold, but I'm not buying every single gold miner, right? Maybe sometimes I don't buy at all. I don't buy any gold miners. Maybe I'll short a gold miner, right? So it's just a reason for me to look into it, to look into the details, to look at the balance sheet, to look at trends, whatever, technicals. I'm not a very good technical trader or investor, but to look at everything there is to look at that determines whether or not I'm gonna fool around with that stock, right? I'm gonna buy it or sell it or short it or whatever. Now specifically, and also the valuation of the stock doesn't really that matter that much, right? What it's valued. It can be a small stock, it can be a large stock. Obviously, Apple is like one of the largest, if not the largest at the moment, stocks there is, period, at least traded on the world exchange. I think Aramco is the biggest company ever, but anyway, so it's one of the biggest stocks, and EXK is it's a very tiny stock. It's less than a billion market cap. Market cap means market capitalization. It's just basically the valuation of the entire company altogether. So if you say that a company is it's got a market capitalization of 1 billion, that means that's basically what it's valued at by the market. All right. Okay, so the valuation really doesn't matter. All that's known about the company and everybody's opinion is already priced into the price. So the price is pretty much the most important thing there is to know. Oop, my bad. To know about anything, really, when it comes to trading or investing. So I do look at the price and what individual stock is priced at doesn't actually matter. The valuation matters, right? You want to know how much the company is worth. Uh, Whether one stock itself is worth 100 or 300,000 or five doesn't really matter. It's just how much that big pie is divided into, right? A stock is just a little slice, and you got to figure out how big that slice is of the company. But the price does matter of an individual stock when it comes to, for me anyway, when it comes to, and for a lot of you probably, when it comes to messing around with options, because I won't need as much collateral in order to sell, let's say, puts or calls, against the stock. I won't need as much upfront capital in order to make those moves. Like let's say Ford is $10, somewhere around $10 at the moment. I'll need $1,000 to sell a put at $10 for Ford, and I'll need $1,000 to buy 100 shares of Ford so I can sell a call against it. So I only need $1,000 in order to play options the way I want to play them. All right, and also if you want to buy options, you can, and they're a lot cheaper with smaller stocks. So now, if I want to sell an option for Berkshire Hathaway, I think they divided the stocks right now, but at one point it was like 300,000. I think they still have a version of the stock that's like around $300,000. I don't have that kind of money to buy, 3 million. What's 100 times 300,000? 10, 30, $30 million to exercise an option, something like that. I can't do math right now, but I mean it's pretty insane. You can see how the price of the stock matters when it comes to having the upfront capital in order to mess around with options. All right, and some of the more important metrics that I'll look at when choosing a stock to mess around with is I look at the implied volatility, all right, and liquidity. So what is the implied volatility is it's how much the market expects and prices in the possibility of the stock having wild swings in one direction or another. Right? So how aggressively the stock gyrates. Does it go like this, all right, this way? Or does it go like this, all right? Is it very wild? So the implied volatility is important because it has an effect on the price of the option. All right? So if I'm selling options, I want the stock to have high implied volatility, but actually not be that volatile. And I'll show you an example of that. One of my favorite companies to play options with. If it's the opposite, right? If the stock is very volatile but has low implied volatility, then that's going to be priced in, and you're not going to be getting this a lot. It's good for buying these options, but not good for selling. All right. So let's take a look at some stocks, and I'll show you what I mean. Oh, and by the way, liquidity just means like how much that stock is traded at any given time, like how many bidders and sellers there is for that stock at any given time, right? It's just easy to get in and out of trade. Sometimes you get stuck in a trade because it's so illiquid. There isn't anybody on the other side of the trade to take for you to take it so you can exit, right? So let's say you buy a painting for $10 million and it's worth $10 million, but if there's no buyers to buy that painting for $10 million when you want to exit, when you want to sell it, you might be stuck with that painting for X amount of time, a couple of years. You may even have to lower the price down so you can find a buyer of that painting, right? So volatility is important when it comes to entering and exiting trades, but it is not important when it comes to determining the value of something. All right, so don't take it as such. Just because something's liquid doesn't mean it's super valuable. All right, those are two different things. Okay, let's take a look at what I mean by implied volatility and what that is. All right, so if we go, let's look at three companies. Okay, we'll look at my three favorite companies at the moment. Apple. I'm not a huge fan of Apple, but I just like it as a stable staple. All right, so let's go to Apple and let's pick an option here. Let's go to options, and let's say let's pick a date, September 20th. All right, September 20th. We're going to do something around the price here. It's 192, one below the price. Okay, so let's sell a put for September 20th, 190 put. Okay, we're going to click on it over here, and it shows you the implied volatility. All right. So it's 28.5%. So we don't have any point of reference right now, so we're going to go into a different stock and find out what that is. Okay, so we're going to go into a EXK, which is a wilder stock, more wild. Wilder or more wild? Which one is it? Should have paid attention in English class. All right, so we're gonna go to September again, and we'll see. It was 28% for Apple. We don't have September. All right, let's just go to August. All right, August. Over here is 59%. Let's see August for Apple. So put August. All right, it's 30%. So 30% for Apple and 60% for EXK, which is Endeavor Silver. It's a slow mining company. And this is a really big, like, this company is literally 1,000 times bigger than Endeavor Silver. More than 1,000, like 3,000 times bigger than Endeavor Silver, all right? So that's a really big difference in size. Well, that's a big difference. All right. So, but you can see the implied volatility here, all right? So that means that the options in EXK will be priced at a premium for similar percentage moves, okay? Now, let's look at Cameco over here. Let's go to the options. Cameco is a uranium mining company, largest one in the world that's public. It's based off of Canada, one of my favorite companies to sell and buy options on, and you'll see why. So if we go to August, if we click on 10, what do you guys think? I think it's about a $4 billion market cap company versus Apple, which is almost $1 trillion. Was going to be more volatile. Naturally, you might think that the smaller company like EXK, right? Just this one's not too much bigger than that. And so the implied volatility, however, is not that big, but it's still bigger than Apple, right? 37%, Apple was 30. But in reality, if we go to it and pull up a 5-year chart of Cameco, right? Does this look pretty volatile to you? Like, look at this straight line in the last 3 years. All right, this is 16, 17, 18, and now 19. This is pretty much a straight horizontal line. Where's the volatility? You know, it goes from like $11 to $10 to $9 to $11 to $10. Now it's sitting at 10.32. This stock doesn't move. We should have an implied volatility of like 5%. Okay? Whereas if we look at something like Apple over the past 5 years, let's look at Apple. 5 years. Look, much bigger moves, right? It changed from, 94 to 227, so it more than doubled in price, and now it's down to 192. I mean, and it just, look at how much it dropped right here. All right, it's like 40% or more move. I mean, this is, in reality, it's a more volatile stock. Yet the volatility is priced at 30%, while Cameco is priced at 37%, and that stock doesn't move at all. All right, you see where I'm getting at? So I look for this kind of mismatch, right? And that's why I like. Well, in reality, I'm playing around with both of these stocks, but you catch what I'm trying to say. I look for that kind of mismatch when I'm playing with options because I could take advantage of the extra large premium for a more stable environment, is a more predictable environment. Okay, so that's how I pick my stocks. It all comes from interests. I would never pick Cameco if I wasn't interested in uranium in the first place. So it's not the only uranium companies I have. I have a lot less uranium companies now than I used to have before. I just basically have a sizable position in Cameco and Energy Fuels, and that's about it. So that's how I pick my stocks. Hopefully you all enjoyed this. I'm trying to keep you updated. Oh, my account is sitting at 58 500 right now. I did add $1,000 though, so I still haven't reached. I'm about $1,200 off of the peak of my all-time peak for this account. So we haven't. It's not an all-time high or anything like that. All right, so I think that's about it. Hopefully that sheds some light on any questions you might have had. Good luck in your portfolios. Let me know how you all are doing. All right. That's it for now. Peace out.